Hello everyone, how's it going? In this video, we're going to look into what is happening with Nio. We're going to cover some positive news, some breaking news, and some problems with Nio. So we're going to cover both the bull and the bear scenario here. Let's get started. Number one, the positive news. Now, this is an article. This is something which came out from an analysis of 100 baggers by Tony. This is all available online. I'll put the link in the description for you to look into it. Basically, what he did was he went in the past and looked into some of 100 baggers and found some underlying patterns that was common in all these 100 bagger companies. And there's something he talks about called as PE expansion. He says that when a company has continuous growing earnings quarter by quarter, then you see this phenomena of PE expansion, where the price to earning expands more than the earning of the company. He gives two examples. So, hypothetically, there are two companies, Flat and ACC. Say Flat and both ACC had earnings per share of $4 in the year of 2000, say $1 in each quarter. So adding all the 4 quarters, you have $4 for the year of 2000. Now come 2001, Flat made an earnings of 1.25 for the first quarter, 1.25 for the same quarter, same 1.25 for the third quarter, and again 1.25 for the fourth quarter. So in total, if you add all the 1.25s, you get about $5 per share. So a 25% growth year over year overall for Flat. But ACC, on the other hand, in the year of 2001, what it does is for the first quarter, it reports an earning per share of 1.10, and then 1.20, 1.30, 1.40 for the fourth quarter. If you add all of it, you again get $5, which is the same as earnings per share of Flat of $5. But the difference is in ACC, you have a growing earnings per quarter. So the first quarter, it had 10% growth. Second quarter, it had 20% growth. Third quarter, it had 30, and then fourth quarter, 40% growth. That is when you see this phenomena of PE expansion, and it creates that foundation for 100 backers. Now, if you go back to Nio and look into the quarter, this is going by the revenue because it's still non-profitable, and you can see the revenues are growing quarter by quarter. Now, it doesn't show the revenues for the second quarter, which came out yesterday, but the second quarter was again more. If we look into this, it reported about 8.45 billion. This is in Chinese currency, and you had 7.98 for the first quarter. So there's already an increase over there. And you can see this is constantly increasing at a percentage. And that is where this is a good phenomena for 100 backers. But again, time will decide what will actually happen. And Nio is branding itself not just as an EV play, not just a car company, but they are also trying to brand themselves outside the vehicle. So you can see on this particular month itself, they introduced this magazine called Citizen for this city. And they came out with this magazine, lifestyle magazine, showing all the different cuisines and different lifestyle places for China. And they have the Nio house, which is all about brand and recognition and artists. That's where they are trying to branch themselves out. So they're trying to come out of this EV, not just exclude themselves as an EV company, but more. That's something interesting. Now, this is another interesting part about Nio. Right now, all the Chinese companies, especially Alibaba, Tencent, and all these big Chinese tech companies are all under scrutiny there, with the stock prices beaten down because of the concerns of Chinese regulations. But Nio, on the other hand, is immune to all of this. The majority reason is because Nio is funded by the Chinese government. You can see that last year when they almost got bankrupt, the Chinese government came in, especially the state-owned HiFi. They came down and they invested into it. They also provide land, and they're giving up different other opportunities for them to manufacture the company, providing different plant manufacturing in place. So they have good support from the Chinese government. And China is trying to position itself as an EV capital of the world. It wants all the economy for EVs established, like the Silicon Valley of the United States. It wants the EV in China, where not just manufacturing OEM, but also the support industries that surround EV vehicles to be based off of China. So that's a good positioning for Nio as a company itself. These are some breaking news that are coming out. This came out earlier this morning, where it's talking about Nio is aiming to deliver 3 new products. And basically, according to this article, it's talking about where William Li recently mentioned that as the EV adoption begins to reach a tipping point worldwide, we believe it is imperative to speed up the launch of new products to provide more premium smart EV offerings with superior holistic services to the growing user base in the global market. So that's something which they are looking forward, and they seem to have some products in line, but we'll look into it. Now, this is interesting. You can see the shares held by insiders is only 0.53%, which was a little bit concerning because Charlie Munger mentioned that there's a book by Nassim. It's called Skin in the Game. It shows about how people or the founders, the insiders, the promoters, how much stake they have in the company. Then you have your interest as a shareholder and the interest of the promoter aligned in the same direction. Charlie Munger even said, you show me the incentive, you show me the outcome, then I'll show you you show me the incentive and then I'll show you the outcome. So it's basically talking about how much skin you have in the game yourself and how much interest you have on the stock market as much as a shareholder. That was interesting, but a little bit disappointing if you look into the 0.53%. But if you look into the details of it, this is an article on Nasdaq, and they are talking about how Nio is not owned by hedge funds. The company's CEO William Lee is the largest shareholder with 10% of shares outstanding. Tencent Holdings Limited is the second largest shareholder, owning 8.3%. So Ma Huateng, he owns about 8.3% of Nio, and then you have Bale Forward, which is holding 6.6%. So William Lee is the largest shareholder with about 10% of the shares outstanding. This is probably not reported properly here in this case, but nevertheless, I'm content with that. It requires a little bit of more investigation to look into how these are broken down, but nevertheless, 10% is good enough for what we can work with. And especially in big companies like Nio, yes, there is something interesting. Now, this is the Q2 report which came out yesterday, and he's talking about these are some sentences which came out from William Lee, and he's talking about how they are looking into new products and new technologies. So he mentioned about this. At the same time, we have also accelerated the research and development of new products and technologies to ensure sufficient production capacity for our upcoming products. He's also talking about how they have been launching out new products, new ideas, and new. So if you look into, in addition to improving the swapping and charging experience of underserved users in North China, we announced the Power Knot plan at Shanghai Auto Show. This happened back in April of 2021. We have been committed to providing a superior holistic EV experience to our users with better products and services. Now, this was the positive side. Let's look at some of the problems that could happen with Nio. One, if you look into the market cap, it's very high with regards to the amount of earnings, the amount of revenue it's bringing in. But look into it. The market cap is sitting at about 72 billion. And if you see all these other companies, you have Tesla, which is sitting at about 700, almost close to $1 billion, where it's only producing 200,000 vehicles. Now, people are thinking about the future growth, the future aspect, and that's where the market price is coming into. You have Toyota, which is a legacy company, which has established itself. It has a strong moat around itself, and it's coming out with about 2 million vehicles, 2.5 million vehicles in that same quarter, and its market cap is only about $293 million. Same thing, you have Volkswagen, you have, you're talking about billions, I'm sorry. So it's 702 billion, 293 billion. You have 102 billion Volkswagen, which is 2.5 million, and then you have all these other companies which are churning out a lot of vehicles on a quarter-to-quarter basis. And if you look into this particular one with Nio, it has only 22,000 compared to the other big companies, and its market cap is sitting at about 60 billion. Well, 60 billion right here, but right now it's sitting at about 72 billion. So you can see that the market cap and the amount of production it's producing, there's no correlation with that. So it's more about the hype, the euphoria which is happening in the market, and that's being added into the market price of these companies. Now, let's look into this particular aspect. It is a very capital intensive business. You're coming out with vehicles, you're coming out with different types of, it's all capital intensive. It requires a lot of capital to even go into that direction. And the net loss, look at this thing. This is the Q2 report which came out yesterday, and they showed about how the net loss has reduced. It's decreasing about 50% from the second quarter of 2020. So compared to 2020, compared to last year, they had a decrease of about 50% in the loss. But compared to the first quarter, it had about increase of 30.2%. So you'll see these losses up and down on a constant basis as much time it takes for the company to go in. But nevertheless, if you come back here, Toyota here, which is sitting at about $293 billion, when it started, it too also had the similar scenario of what Nio was facing, and it was also supported by the Japanese government back then. Same thing is happening with Nio. It will be interesting to see how this plays out. Now, this is a video which came out very recently on this channel by Brian Feroldi. The link will be in the description, and they gave a good summary of all the the bull and the bear scenarios. And there are some points which are very interesting. One is non-recurring revenue, because once you have the car out in the play, there is not much of recurring revenue. But yes, they do have the battery swapping, which is a little bit, but compared to the maximum where the car is gone, you don't have much recurring revenue coming out. Well, but if in the future, once they have the self-driving capability, that's something as a SaaS product, they could have some recurring revenue. But again, compared to the car itself, it'll be a smaller percentage. Competition, so amount of float is less because now not just Nio, you'll have different types of other EV companies coming up. The XPeng, the Li Auto, there'll be quite a bit of competition that will arise in China itself. Forget about the EV vehicles out in the world, other parts of the world. Like for example, Toyota itself is doing their EV vehicles, Volkswagen is doing their EV vehicles, General Motors, Ford, they're all coming out with their own EV vehicles. So you'll see a lot of competition in that phase coming out. They are located in China. They're talking about this could be a geopolitical, I don't know much about that, but it could be a risk, according to these gentlemen. Lots of capital, that's something which we saw here. It's a very capital intensive business. Amount of losses, amount of that's something which Warren Buffett looks into, the amount of cash that was required in order to generate a dollar for the company. So the margins are very important as per Warren Buffett. So in that regards, it is a capital intensive business. Now it is in its growing phase, so you'll see a lot of stock dilution, and that's the major. That's the very recent companies come down to the stock market. Stock market is nothing but an avenue for them to raise capital for their business, and that's where you'll see a lot of stock dilution. And with them going out to different stock exchange markets out in Hong Kong and Shanghai, that tells you that the company is looking into stock dilution to raise capital for the business. That's something to keep an eye for, and to be expecting that as the company grows. But nevertheless, it is an interesting play. It's something to definitely look into. Just wanted to share this information with you. This is not financial advice, just a research on what's happening. Do your own thing, do your own research before you do anything with this company. With that, take care, stay safe, bye-bye.